It's about that time of day again here, folks. Back in the action here once again. Hope you guys had a great day out there. It's about time to get back to work here. We got a lot to talk about in tonight's video newsletter. And of course, it's Tuesday evening. It's August the 6th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you forgot, I help traders find high-quality trade setups using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. My job is extremely important tonight because tonight I'm identifying the best setups we see setting up for tomorrow. That's Wednesday's hump day trading session. And we got a lot to cover here tonight. We'll grab a look at the calendar, then we'll open up those charts. We'll grab some oil, S&P, Nasdaq, gold, and euro on the docket for tonight's video. I'm going to jump in here first on crude tonight, though, because crude just got shot going lower in the wake of the API report. But we've got a pretty important level we're sitting on as major support, and I've got 3 possible scenarios I'm waiting here for to prep tonight on this video. Let's open up crude. Let's grab a look at that crude chart here tonight and take a look at what's happening on the black gold, that Texas T. First of all, we know that oil is bearish overall right now. With a bear market going lower, I do want to be a seller, and I want to sell up at levels of resistance. The problem we have right now is as I mentioned in last night's video, we're looking at a major support area down at 76 to 59. Now, I don't want to get into a habit of selling at support, right? I want to sell at resistance. So really at this point, there are 3 different scenarios that I've got to be ready for. One is if we get the pullback. I've got some key levels of resistance, and we'll talk about 3 different patterns I'll be looking for to sell off that battle zone tomorrow morning. I'm also thinking this market may go sideways here, and we may see it start to trade sideways here and go sideways. If that's the case, I'm going to buy low, I'm going to sell high, and we'll focus on failures. We'll dig into those failure patterns right on this chart here tonight in tonight's video as well. And of course, at the same time, what if the market keeps running lower, right? What do we have down there? We've got a big ways to go until our next major level of support. So if we do see this market continue to roll lower, we'll put together the plan as far as what the best plan is going to be to capitalize on it as well. As added bonus too, the 4th scenario, we have that trading range up here, and I'm also watching for a possible reversal back up into that trading range. So really 3, maybe 4 different scenarios that we need to be ready for tomorrow on oil. I'm going to roll up my sleeves and put all the pieces together for the oil market here for tomorrow, so don't you forget to stay tuned on that. How about some S&P? S&P, of course, is bullish here tonight. We are, as you can see here, 1, 2, 3 legs up, 1, 2, 3. We're bullish, but we're sitting in a major area of resistance right now. I don't want to buy at this level of resistance. I want to buy at an area of support. I look at this as a spike in channel, and ultimately I'm looking for a couple key setups here right now to buy off a pullback on the S&P 500. You can also see potential for a trading range up here, so we do need to be ready both mentally and technically if this market goes sideways tomorrow. We'll talk about the plan for that. And if we do get the market running higher, right? What's the plan if these bulls continue? You know, we're about halfway up the ladder back to those all-time highs. Will we break through this halfway point? We'll put the plan together as far as if we do break higher here in Wednesday's session. Got you covered on the S&P. Over on the Nasdaq. Nasdaq, of course, very similar situation to the S&P. We are 1, 2, 3 legs higher, of course, into a major level of resistance. We know we're bullish, but I don't want to buy into this area of resistance right now. I'd rather buy a pullback. I've got my eyes on some key levels of support down here to use on that pullback, and we'll talk about 3 different types of patterns to look for on that pullback. We'll also keep an eye on a potential trading range, and we'll talk about the best setups for a potential range-bound day tomorrow. And obviously, right, if the market continues running higher, I've got a couple key levels to look for as we go higher tomorrow, and we'll break that down into a lot more detail in tonight's video. How about the gold here tonight? gold, as you can see, is trying to finish off a major measured move. We are bullish on gold. Both fundamental and technicals are all telling us keep buying this gold right now. The world, of course, is telling us right now to seek safety, right? If you read the headlines right now, it's no surprise to see why gold is bullish. We know where these buyers are trying to go. We get a big round number and a measured move up there, acting as the market's objective. We know we're bullish, but we got one big problem, and that is right back up to retest those highs, those overnight highs here. This is major resistance right here. And so ultimately at this point, I've got to wait for either a pullback, so I'm not buying into that level of resistance. I'll look for probably 3, maybe 4 different types of pullback patterns here down in that battle zone tomorrow. And then of course, if we do go higher, right? If we go higher, we have a very, very tight space up here, and we're going to really have to work hard to thread the needle as we go higher. There are 2 very specific patterns I'm looking for to be a buyer as we go higher, because I don't want to chase the market higher as we have that measured move waiting just overhead. And then last but not least here on the euro tonight, the euro is, well, as you can see here, right, it started off the session after that big bull run, right, from yesterday. They kind of overcommitted and then slid back lower here, now ending up what looks to be inside of a trading range. I think we're overall bullish right now, but I think this range right here is going to make for some interesting price action tomorrow. I know where the market wants to go. The market wants to go back and retest the high, right? Anytime we see a bull market, they're always going to want to pull back and retest that high. So we know where they're trying to go. Can I get a pullback, right, and finish off that battle zone, right, that 2 test the battle zone? I'd love to buy a pullback on that euro. I'd also like to carefully, a lot like the same situation on gold, as the market tries to go higher, I don't want to buy into that major area of resistance, so I got to be careful as we make that move going back up to retest the high. We have a lot to cover on euro, gold, Nasdaq, S&P, and of course that crude oil futures tonight. We're going to break all these details down into small bite-sized pieces for you so you are ready for tomorrow's trading opportunities. But before we jump into tonight's charts though and put the plan together, I just want to make sure to remind you to join our mailing list. Now, you might not be aware of this, but before I publish this video on our YouTube channel, I fire off an email to everybody on our mailing list. And I want to make sure that you get that email. That way you're one of the first people to get access to this nightly newsletter every evening when I publish it. Don't forget to do that, right? So join our mailing list by giving me your first name, right, your email address, and then of course hit that subscribe now button. And don't forget, guys, when you subscribe and join the newsletter, your job isn't over yet. You've got to go check your email, because I'm going to send you a welcome email with a verification link and a lot of great, right, free information inside that welcome email. So when you join our mailing list, make sure you check your email for that welcome email with that verification link to make sure you verify you got the email. That way it'll give me approval to keep emailing you the newsletter every evening when we go live. And don't forget, sometimes that welcome email gets stuck in your spam filter. So if you don't see the welcome email, check your spam, promotions folder in Gmail, because it's probably stuck in that spam filter. So don't delay, join the mailing list. That way you're one of the first to know every evening when this nightly newsletter goes live. And then really quickly, guys, in the comments section below this video tonight, I need your help for 2 seconds. What do you love? What do you hate? What would you change? What would you do more of? What would you remove out of this nightly newsletter? In your opinion, what's the most valuable thing for you that I do every evening on this newsletter, so I can make sure I keep doing that? I'm always making sure that I'm improving this video newsletter, which means I rely on you to give me some great feedback. So what part of this newsletter do you skip? What part of this newsletter would you never want me to remove? Give me some feedback in the comments section below. Let me know what you love, what you hate about this nightly newsletter, because I am always listening. And while you're down there, give me some very much appreciated feedback. Give me a thumbs up on the YouTube video tonight, because every time you hit that thumbs up button, it helps me expose this video to other traders who are dying to learn this strategy as well. So thank you very much for the feedback in the comment section below. Give me that thumbs up on the YouTube video. And by the way, if you have feedback and you want to call me in the office, I'm always standing by. I'm going to date myself here real quickly, but I actually talk on the telephone. Believe it or not, there was a time where we actually spoke on the phone. We didn't text back and forth to everybody. So when that phone rings in my office, I pick up the phone, I answer all the calls, and I really love talking to you guys. So don't be afraid to pick up the phone and call me in the office if you have any questions about anything we talk about in tonight's video, or maybe you want questions about the best brokers, the best charting software right now, or maybe you want to learn how to get access to our trade room on a free pass or participate in our free trading courses. Whatever the question may be, please don't be afraid to pick up the phone and call me in the office. I'm not that scary of a person. I look forward to answering the call, answering all your questions. That way you get the good stuff straight from the horse's mouth. But in the meantime, let's jump into tonight's newsletter. Let's start off tonight here with the calendar here for tomorrow. Tomorrow, of course, is hump day. It's Wednesday. It's August the 6th. Tomorrow night, of course, or tomorrow, right, is Wednesday, August the 6th. Tomorrow, of course, is your typical Wednesday. We get your weekly inventory report at 10:30 Eastern time. Every Wednesday morning, 10:30 Eastern, we get the weekly inventory report, right, known as the petroleum status report. Now, my rule of thumb on Wednesdays is to get to my trades on oil. This will only apply to oil, obviously, before 10 a.m. Eastern time. Then the news comes out at 10:30, and we normally have to wait about 10 minutes for the news to calm down, the markets to calm down a little bit, and once that dust settles, then we'll grab those charts and get back to trading on oil. So really the only market that's affected by this is the energy markets, right? Mainly crude oil futures, the CL contract. So tomorrow morning, that window between 10 o'clock and 10:40 is almost untradeable. Now I know what you're thinking. There's a lot of volatility around that news event, and it's very tempting to want to gamble, right, and try to capture some of that profit, right, or capture some of that volatility, but be careful, right? Yes, you can make a lot of money in a short period of time with big news events like this, but you can lose just as much. And remember, when you take a big chunk out of your trade account because you're gambling around news, it doesn't just cost you money, it costs you confidence. And that confidence is really difficult to get back. That's the biggest reason why I don't recommend trading news early in your career, because anybody can get a job driving Uber on the weekends and put more money in your account. The problem is if you take a big chunk, right, a big hit because of a bad trade, because you weren't prepared for the risk involved with trading news, that hit is it's not easy to replace the confidence. Once you lose your confidence, you'll really never be the same ever again. And it's a scar that will follow you around for the rest of your trading career. So again, I know there's money that could be made, but there's also money that could easily be lost around that news. And again, if you want my advice, there are plenty of other reliable times during the week you can be trading. Probably not a good idea to be gambling. And again, it's not the money, it's the confidence that really is the big hit to us if we get hit on a big news event. I can tell you that from personal experience. So 10 o'clock to 10:40, that's my window. I want to get those trades before 10 o'clock tomorrow morning on oil, if at all possible. And of course, tomorrow morning we'll be in our trade room at 8 o'clock Eastern time. Now, in addition to this tomorrow, there's really not a lot on here. We got a couple Fed speakers tomorrow, but really for the most part, though, I'm sure the media will bicker back and forth about everything going on in this world, so that will be nothing new. But at the same time, we're also watching that kind of tit-for-tat trade war between the U.S. and China. We saw some more developments today. We're kind of waiting on that next kind of retaliation to come out later this week, and that will hopefully result, right, in some more big moves up or down for us. So bottom line is, we don't know when when it will happen, but we're definitely tuning in tomorrow morning, keeping our eyes and ears open for the next shoe to drop in that tit for tat, eye for an eye trade war we're going on between the U.S. and China. And as always, right, we'll be in our trade room tomorrow morning, bright and early, keeping a very close eye on things with all of our clients. Let's get started here tonight. Jumping into charts right now, crude oil, S&P, Nasdaq, gold, and of course the euro. Over here on oil, as we mentioned in the introduction, there are pretty much 4 different scenarios that you're watching for right now. The first scenario is a pullback, right? I want to see this market pull back. Give me a pullback into some key levels of resistance, like the top of that channel. Give me a pullback into some key levels of resistance, like those reversal lines, right? Give me a pullback off of this low. Ideally, I want to see us get above the moving average, because when we get above the moving average, what happens is that buyers will try to buy that pullback. The problem is the market's not bullish. The market's bearish. And when those buyers, when they try to buy that pullback, now we know where their stop losses are, and we can easily sell into their stops, sell a pullback for a retest of that low. So if we do get that pullback, I'm looking for a combination of a buyer failure pattern into a seller pullback pattern and a retest of that low. But what if the market goes sideways down here, right? It easily could. As I mentioned earlier, we have that big level of support, right, at 59 and 76. So we might not see the market pull back. The market may be a little bit too bearish to pull back right now, and we may start going sideways. What's the best way to sell if the market turns sideways? In this case, what I'll do is I'll use the size of that range to create an area of resistance overhead. Now, I talk about this quite a bit on the newsletter. The size of the range determines the size of my sell zone. So right now, we don't know enough about this yet, but once we do know the size of that range, then we'll kind of reverse engineer that and we'll find our sell zone. The bottom line is, once I know where my sell zone is, now I look for a bullish breakout. I look for the buyers to try once. I look for the buyers to try twice. This, of course, creates what I call a 2-try failure pattern. In other words, the buyers will go up, they'll try to buy that pullback and send the market higher. It's not a bull market, so the odds are stacked in our favor to be a seller, and we want to sell directly into their failure. This is called a 2-try failure pattern if the market goes range bound. Now, can we buy this? Right? Is that possible too? If the market's going sideways here, right? If we go sideways here now, can I buy it too? Because a range, of course, tells me to buy low, sell high, right? If we see this market going sideways overnight, we're getting a couple hours worth going sideways right now. We can look to pick a bottom on this, but remember, you want to use that nested variation of that failure. Wait for the market to go sideways first. That's the key. Wait first for the sideways range, then let the market try to go lower. The bears now will try once. The bears will try twice. Once I see those bears trying twice now I know the sellers, again, the sellers have control. So I have to give them 2 attempts before I can get that run going back up into that trading range. We call that a nested variation, right? Because it's counter trend. So that covers the range. Now, what if we keep going lower here? Well, if we keep going lower, we have quite a ways down until we hit the next big milestone. Next big milestone is 5110, right? It's a ways lower here. Probably not going to happen tomorrow, but hey, this is the world we live in. It's definitely possible, not probable, but possible. If we do roll lower here, right? If we do roll lower, I want you to think of this now as a spike in channel, right? So if we do roll lower, it'll probably start setting up as a spike in channel here. If we get this setting up overnight as a spike in channel, I'm going to mark up those prior swings, wait for that pop higher, get that buyer failure, and look to sell right into those stop losses. So imagine now once again here, right? Imagine now once again we kind of roll lower here, right, in the overnight, right? We keep rolling lower. At this point now, this becomes a spike in channel. Okay, moving average will come over, and And what's going to happen is the market will eventually pop up. The buyers, of course, will mistake this for being a bull market. They'll try to buy off that moving average. When the buyers try to buy off the moving average, we'll be waiting right there to sell into their stops and, of course, sell the pullback, right, for that retest of that low. So this will be, of course, a failure pattern into a pullback pattern combination, right, as we go lower. So there are three scenarios. One is the pullback, one is the range, the other is we keep going lower. But there's one more, and that is, don't forget, we have that trading range from yesterday's trading session that really, for the most part, we spent a lot of time inside that range today. So there's a pretty good odds that if these sellers can't get their act together down here, this will end up right back into that range. There are two things, right? Two types of patterns I look for if this market makes a run back into that trading range. First of all, we look for what's called the 1, 2, 3 reversal. This is the most common way to do it. 1 is a strong move up. 2 is a pullback to the moving average. 3 is a strong move off the moving average. Now, once we have that strong move coming off the moving average, once we see that momentum shift off the EMA, now we mark up those highs, we mark up that low, and this now becomes the channel low that I'm now looking to use for a long. So again, I've got to wait for, first of all, it's a bear market. If I'm going to be a buyer, I've got to wait for a 1, 2, 3 reversal, right? Come off that moving average with some strength, right? I want to see that momentum start to turn off the moving average. And again, remember, right, if they can't hold that pullback, off the moving average, you know what's going to happen? Those buyers are going to fail. They're going to bail on those long positions, and the market will sink right back down in. So keep your eyes open for the possible bullish failure, as we talked about earlier. 1, 2, 3 going higher. I'm going to mark up that high, mark up that high, mark up that low. There's my sweet spot now, and now I'm looking for one of my 4 favorite entry patterns, right? Failures, pullback, strength, traps, coming off of the low of that hidden channel. Now, there's one more pattern we could look for. This one requires some extreme strength. So if for some reason things turn higher here, strong move up, look for the 1, the 2, and the buy from there. This, of course, requires a hell of a lot of strength on the way higher, right? So a lot of strength going higher, right? It doesn't even blink at the moving average. What moving average, right? It goes tearing right through it, right? And of course, we know at that point now they're trying to go back up into that range, and we're buying off that second try failure. That's the trick, right? That's the trick when it comes to that reversal. So there are 4 different scenarios that we are now locked and loaded for tomorrow morning's trading session. But before I move to the S&P right now, I want to make sure I give you a much deeper dive into the entire trading strategy that we use in our trade room. And to do that, I've access to a free trading course in the upper right-hand corner. I'll also put a big red button right below the video tonight on our blog here at Sideways Markets. So grab that link in the upper right-hand corner, or hit that big red button right below us tonight on the video here on the blog at Sideways Markets, and join the free trading course. The free trading course is an excellent way to get a bird's eye view of the entire strategy that we use every morning in our trade room. You'll learn the 3 steps to success, my 4 favorite entry patterns, and what it feels like to be with us every morning in our trade room. So grab that free trading course in the upper right-hand corner, because I'm going to keep moving here tonight, but I want to make sure you get the deep dive into this trading strategy that I know you really want, because I know you want to learn as much as you can on this video. So while you're registering for that free trading course, and don't forget, when you register for the free course, I'm going to email you all the details to get access, so make sure you check your email, including that spam folder, just in case it gets stuck in your spam filter. Over to the S&P right now. S&P and the Nasdaq are very, very similar. As I mentioned earlier, we are very much bullish right now here on the S&P. The problem is we're running right into a major level of support. Major level of resistance. I don't want to buy into resistance. I want to buy at a level of support. So what I'm doing now is I'm going to mark up these highs, bring it down to these lows, create a channel, right, or a spike in channel is what most folks would call this, spike up, right, into a channel. And of course, I'm looking for a buyer here. I want to be a buyer here, come out the low of that channel. You can also see I've got that trend line coming down as well. And so that area right there, that 2860 to 2850 area really does look very attractive for me. So we'll be focused on buying nice and low on that. I can also see too some double tops up here right now too. So there's potential this might be a range. So much like oil, we definitely want to be ready for that. And of course, if the market runs higher, right, what's the most important thing to keep in mind if that market runs higher? So now we kind of get a bird's eye view. Now let's drill down in and let's see what this chart really looks like here. First of all, if we get a really deep pullback down to the low of that channel, there's one big concern, and that is momentum. Now, I want to be a buyer, right? I want to be a buyer down here, but the problem is if this thing sinks like a rock, the problem is now that's going to feel like a very bear market. It will, right? When the market makes a really deep pullback, right? Really deep pullback, what happens is the sellers are going to give it a couple shots before they let this thing go back higher, right? So imagine deep pullback, the bears try once, the bears try twice, and then the market goes higher. So that's very, very similar to what you're probably going to get if we can get back into this 28.55 area. So imagine now a strong shot lower. Momentum will be overall bullish, but in the short term, it'll be very bearish. So just like buying the low of that oil market we just talked about, you want the bears to try once, try twice, and then we can be a buyer up from there. Now this is a failure pattern, but it's just a variation. It's called a nested variation of that failure pattern. You'll learn a lot more about these failure patterns, by the way, in that free trading course that I mentioned earlier just a few moments ago. But that's going to be one definite pattern I'm watching for here, right, as we go. Now, maybe I'm wrong, right? Maybe I'm wrong. Maybe the market runs lower. Maybe we see that moving average come over. The sellers try to sell it, and they immediately now jump up. Well, in that case, I don't want to chase after it. So what I'll do is I'll wait for the pullback. I'll wait for the pullback and buy it instead after the pullback. So the moral of the story is I don't want to chase it, right? I don't want to chase it. If I wait for 2 tries and I only get 1, right? If the bears only try once and it shoots higher, wait for that second try, wait for them to try twice, and buy that pullback from there. So just make sure you treat those sellers with respect if we get that big move down. You don't want to just blindly buy it, right? Because a lot of times it'll make a run lower, it'll hold that pullback and keep going, right? So we don't want to just blindly buy down here because all that momentum will be far too strong as we go lower. Here's another thing to consider here as well. And again, we got that trend line down here, right? Keep your eyes out for a 2-legged pullback. 1 leg and then 2 leg. So keep your eyes on a 2-legged pullback, draw that trend line over, and then use that trend line as the key level of support. Okay, we call these 2-legged pullback setups because there's 1 and there's 2 legs on the pullback. So those are 3 different scenarios to keep in mind as we get that deep, deep pullback. Now, what about the range? Nice big bull move up, double tops, double bottoms. What do we do with the range? We want to buy low and sell high. Momentum is bullish, so I want to buy low. I want to buy below that range. What's the best way to do it? Let the market try to go lower. The moving average, of course, comes over. The sellers try to sell off that moving average. And with those sellers trying to sell off the moving average, now we know where their stops are, and we look to buy right into those stops. Now, I want to warn you on this. Make sure your entry is outside the range. Okay, a lot of times what happens is we get these patterns and they set up just a little bit below that low. You don't want to be trading up inside that range, right? There's not a good risk-reward ratio on that. It's not going to be a very good, reliable trade on this. So what you want is you want to get a nice, strong breakout, let those sellers try a second time, right? And then make sure you're buying before we get back up into that trading range. That way, there's no worry about having a poor risk-reward ratio, because again, the better your risk-reward ratio, the more reliable that trade will be. I want to go with momentum, I want to go with the bulls, and I want to make sure I'm getting a good low amount of risk with a big amount of potential reward, and you can't get that if you take your trades inside the middle of that trading range. Now, what else can we do here? What if the market runs higher here right now? There's two patterns, as I mentioned earlier. The first one is the 1, 2, 3 breakout. Mark up that high, mark up that low, mark up that high. There's your sweet spot, right? And we're buying off the low of that channel, right? Makes sense, right? So again, if we do see this run going higher here, 1, 2, 3, I want to see that 1, 2, 3, that breakout on strength. I'm not in the business of buying high. If you want to go higher, show me proof. Because a lot of times the market will push into the high, but then it won't go anywhere. So I want to see it go 1, 2, 3, hold that pullback, mark that high, finish off that channel off the low. You got it. And then we're looking to buy that pullback down to that low. The next thing to keep an eye on would be a strong move up. And if we do get that strong move up, we have to assume that big round number will be a little bit of resistance up there. I want to see a 1, a 2 with a trap low. Anytime I'm concerned about potential resistance overhead, especially like a round number of 2,900 right now, if I can get that strong move going higher, make sure we have the bears try once, make sure the bears now try twice, and then of course look for that trap low, because trap patterns are by far the best patterns to squeeze out a couple more drops of profit before we reach that major objective, which we assume is that big round number if it shoots higher from there. So we get a 1, 2, 3 breakout and a 2 try breakout up to those highs. The one thing we haven't talked about yet is a reversal. Now, as I mentioned in the introduction, we're about halfway up the ladder, about halfway back to retesting all-time highs right now after yesterday's big one-day collapse going lower. So we're probably going to see some sellers start to get into these markets again here tomorrow morning. What's a bear market look like? A bear market starts off with a strong move down. It then pulls back to the moving average, right? And it jumps off the moving average. Okay, I call this a 1, 2, 3 reversal. Okay, 1, 2, 3. So 1, strong move down. 2, pull back to the moving average, right? And 3, I want to see momentum shift as it jumps off the moving average. Now, with that jump off the moving average, we don't want to chase after it. We mark up our new lows, our new highs, and now we start trying to pick that top, right, and sell off the top of that new channel. Now, this obviously is not drawn to scale. This all depends on how it sets up. So 1, 2, 3. Again, it's got to come off that moving average, mark up that low, up off that high. And, of course, now we know where our sweet spot is. Now we're selling off the top of that channel. So just remember, when you're looking to be a bear here, we've really got to get some strength going lower right now in order for this market to turn bearish before we can start selling this, because this could easily keep rallying higher here to go back and retest those highs right as we get later in the second week of the month. So don't forget, 1, 2, 3 reversal is the most reliable way to trade that reversal. I would not recommend trying to sell a bull market right now. And of course, tomorrow morning, we'll do all of this together. And don't forget, guys, you can see lots more examples of all of these patterns I've mentioned here so far inside of that free trading course. The link's in the upper right-hand corner. Let's keep going. How about some Nasdaq? So the Nasdaq is very similar here to the S&P, as you can see. We're definitely bullish. We've got 1, 2, 3 legs higher. And as you probably have heard me say before, anytime we go 3 legs up, we usually see the market, right, go into some sort of trading range. And it definitely looks like that. It honestly looks like we may have 2 ranges on this chart right now. One being the short-term range, and the other, of course, being potentially this double top being a kind of a larger range. Right? I'm looking at it right now as a spike in channel, but that spike in channel, you'll notice that spike in channel is almost flat. So it's basically like a range-bound market right now with a big bullish bias to it. Very, very similar plan here right now on the Nasdaq. If we do get that pullback, it'll be a relatively deep pullback. And anytime we see a deep pullback, right, we always want to think one try, two try, and then back up. So very similar thing. Pull back over here, right? Pull back down to the low. Again, one try, two try, and back up, right? That's called the nested variation of that pattern. Or maybe we see the 1, 2, 3, draw that trend line over, right? Up and over on that two-legged pullback setup off the low of that channel. Or maybe, of course, we don't get a deep pullback. Maybe in the short term, we end up going sideways here. Market, of course, runs up. If we go sideways here in the short term, that tells us the buyers have accepted these higher prices, and now we look to buy below the low of that trading range. The best way to buy underneath a range is the two-try failure. Bears try once, bears try twice. Let them try once, let them try twice, and then again, we're making sure we're not going to buy inside the range, right? You want to get it as it's going back up into that trading range, and you want to be very careful to avoid patterns that set up right inside the range. That's just simply too close for comfort. What I want is, I want to see this market try to make a run for it, get that moving average coming over, let those sellers try to sell off that moving average so I can then be a buyer now on the way back up to retest those highs, right? Let those bears wrap that rope right around their neck, and right when they're about to fail, we're buying right into their stop losses as the market moves higher. Now, speaking of moving higher, what's the plan as it goes higher here? As it goes higher here right now, we have to assume now we need to see one of those two patterns, right? One would be the 1, 2, 3. The fact of the matter is we're sitting right at a major measured move right now, and that major measured move, we cannot just blindly buy up here. We want to wait for that 1, 2, 3 reversal, mark up that high, mark up that high, mark up that low, and then we're looking to buy that pullback right off of that low. Makes sense, right? So 1, 2, 3, 1, 2, 3, and then of course we buy that low. We don't want to try buying that pullback because that first pullback oftentimes will fail right back into the range. And remember, if you want to get a little more aggressive on this, we go up, that crown reversal that we talked about in last night's newsletter. That will be the most aggressive way to trade it, obviously, because you're going against that trend. But that's a good example of why you just simply don't want, right? You just simply don't want to get caught trying to buy, right? Trying to buy that high. So as we're going higher here right now, it's a 1, 2, 3 breakout. Mark up the high, mark up the low, buy the low of that new hidden channel. Or do we see that razor sharp strong move up, right? If it really starts to push higher here, one try, two try, and then up from there, right? You're going to want to see that 1, that 2. And again, this has to be a very strong move to qualify this setup. It's got to be a very strong move. Let those sellers try the first time. Let them try the second time, right? First try, second try, and then from there we're buying right into those failures, right into that two-try failure on that breakout. And then, of course, last but not least here on the Nasdaq, how do we turn bearish? Strong move down, pull back to the moving average, strong move off the moving average, right? That's the key. That's the key. Mark up that low, mark up that low, mark up the high now, and now that tells us now where that channel is going to be and want to sell off that channel. Again, be very careful trying to sell into that first pullback, because there's a good chance that first pullback will try, and eventually fail, much like we saw back here. Strong move down, bears try once, bears try twice, right, and then run back up. So we can't just assume here that because we see a strong move lower, we can't just assume here, right, that these bears take control. They have to actually show us, right, that they actually have control by actually, 1, 2, holding that pullback. That's the key. They've got to hold that pullback, and once they hold that pullback, now it's on. Mark that low, mark that high, find my new channel, and we're selling off the top, right, of that of that channel. So that's my plan there for the Nasdaq. Up, down, sideways, and the reversal. Everything's pretty much covered there on the NQ. And again, tomorrow morning, we're going to trade all this stuff together in our trade room at the opening bell. Over on the gold here, the yellow metal. Yeah, we're definitely bullish. But as we mentioned in last night's newsletter, right, we're right at the high there, and we're seeing some rejection, right? You can see once again here, right, we're not seeing any acceptance of that higher price right now. The buyers are definitely knocking on the doorstep right now. They're definitely knocking on the front door, but we haven't seen enough proof yet that we have these buyers in a position to be bought right now. We're way too high to be a buyer. Now, it makes sense, though, right? We're bullish. Strong move up, retest the high, right? We always know anytime we see a strong move, we're going to probably retest the high, right? Strong move, we're going to retest the high. We knew that, right? We just knew to buy low today, right? That was the plan from last night's newsletter. So now that we know we are back to retest that high here, it's pretty obvious we're bullish. I think we're going to be able to use this channel here, right? Mark up those highs, mark up that low. I would imagine they're trying to get up to the top of that channel, right? I would imagine they're trying to use the top of that channel because it's also going to be right around that measured move. I would also imagine that big round number is also playing in here tomorrow as well. So I think all eyes and ears right now are on that 1500 area, maybe a little bit before that, right, with that measured move. But again, the only problem right now on gold is we're sitting literally right at this major level of resistance. So knowing that, I don't want to buy at resistance. I want to buy at support. So really, like the others tonight, there are three basic scenarios. Do we get the pullback? I mean, that would be ideal, right? I've got the size of this range now telling me exactly where that battle zone is. So can we buy a pullback? That's one option. The other option would be, what if we keep getting chopped up and going sideways? Or what if the market goes higher here, right? We know a lot of these already, but let's go over them again right now. As we get the market, let's say, for example, we pull back here right now, right? If we get that pullback off the high, get that moving average coming over, get those sellers to try to take the bait and sell off that moving average. Once those sellers, right, once they show us they're trying to sell off that moving average, now we know exactly where all the stops are, and now we can be a buyer here now right into those stop losses, right? So again, it's a bull market into a, right, bull market into a trading range. If we can get a pullback, let those bears sort of sell off that moving average, right? Let them try to sell it, and we'll buy up right into their failure for a retest of that high. Now, at the same time, too, as well, if this really shoots lower, right? If it really collapses lower, right? That momentum will tell me use the nested, the 1, the 2, right? That's the difference. A shallow pullback tells me a regular failure pattern, right? A deep pullback tells me use the nested pattern. Then we can look for that failure into that pullback, right, for that move back up to retest the high. I have no problem taking either one of those setups. I just got to wait for the rules to qualify it. That's all. All right. So again, a shallow pullback here, moving average comes over, right? It's a failure pattern and a retest that high. If it's a much deeper pullback now, look for that nested, the 1 try for the bears, the 2 try for the bears, right? And once you've got those bears trying twice now you've got those sellers fully committed. Now we know they're out of bullets, right? And now we can buy into that failure, get that moving average coming over, right? And of course, back up now to retest those highs. If we go sideways, not a lot changes, right? Even if we end up going up and then right back down into this trading range, right? So keep an eye out for a range-bound market. If we do end up going sideways, again, even if we do, you know, like we saw last night, right? Even if we do go up and then right back down again, right? If we go up and then right back down into that trading range, same basic stuff here. So if we do get stuck inside of a range, and this of course could be here, it could be up here, it really doesn't matter. Anytime I see a bull market though, start going sideways on the screen, the next thing I want to do now is wait for a failure, right? Wait for a failure. Get this market below the range. Let those bears try twice, once and twice, 2 try failure pattern. What you're doing is you're simply looking for those sellers to try to sell off that moving average. It's not a bear market. The odds are not on their side. I'd much rather be a buyer, using a seller failure in a bull market, right? Rather than trying to go against the trend, I want to go with momentum because that's the most reliable direction. And to do that, I like to look for times when sellers are getting caught on the wrong side of that momentum, right? Look for chances to buy into the stop losses of those sellers. And again, I've said this a couple times already, I've got hundreds of examples of exactly what I just described inside that free trading course. So when you get access to the free course, log into the members section of the website and you'll see hundreds of trade examples right inside the members section there. That way you can see what they really look like, right? And learn what these patterns really look like. Now, next up here, what if we break higher here? You know, if we break higher, really the key here is we've got to get some strength. You know, that's the big deal. Okay, the big deal right now is we don't want to buy a breakout right now because it could easily come right back down like it did yesterday, right? So we could easily have the same thing we saw yesterday. It could go up and right back down again. So I've got to wait for those two patterns, right? One is the more reliable one, right? It's the 1, 2, 3. That third leg is what confirms it. Mark up that high, mark up that low now, and we're buying the low of that channel. Right, that new hidden channel. And of course, our target at this point now, right, targets are the measured move and that big round number. Or maybe we see the market jump, right? What if it jumps higher here? What if it really jumps as it goes higher here? What's the next step there? One try for the bears. And then honestly, because we have that overhead resistance up here, if we get that strong move up, look for a trap. One try for the bears, two try for the bears, trap low, and up from there, right? Trap low and then up from there. Make sure the bears try once. That's the profit taking. Try twice. Those are the actual short sellers. Does that make sense, right? So as the market runs higher, the first pullback is usually the profit takers. It's the buyers who are like, whoa, take some money, right? Pulls back. But then as it goes higher, you've got the second, right? Number two, those are the actual short sellers. Those are the folks who we need to get stuck in this because when they realize they're wrong, they're the fuel to push this thing higher for us. We need that to try. We need the buyers who are already in. We need them to get out early and then be tempted to chase after it again. And we also need those short sellers who are trying to call that top. We need those short sellers to come in and to sell off that high because their stop losses are the fuel for that move because you're buying very high, right? You're buying pretty high up there. You need that fuel to keep that market running higher. And the fuel, right? The fuel is those stop losses, right? Those sell stops, right? Sellers have their stop losses up there. Those are buy orders, and they're going to give you the fuel you need for that one-to-one target. So as we go higher here, keep your eyes, right? Keep your eyes on those two breakout patterns. Now, how do we turn bearish? Strong move down, pull back to the moving average, right? And strong move off the moving average. 1, 2, 3 reversal. Mark up that low, mark up that low, mark up that high. Now we know where our sweet spot is and we're selling off that high. Now typically, if you were to kind of zoom in on that area right there, right? Typically that pattern is going to be a failure into pullback combination. So imagine kind of zooming in that area right there. That will typically be a failure into pullback combination, right? Failure into pullback combination. And again, you'll see lots of examples of those failure into pullback combination inside of that free trading course, right? Upper right-hand corner, right? Or that big red button right below the video tonight on our trading blog. So make sure you grab that right off the YouTube channel here before you finish up the video. Next up here, over on the euro, wrapping up here on this euro. Euro is a little bit left to be understood at this point. There's not a lot to work with on this euro besides this trading range. You know, we know we have a big run up from yesterday, right? We see how the market kind of settled in here, back in, and kind of went sideways. And of course, you know, we use that, you know, that was the main focus today on the euro was that range, right? We run lower, the bears try once, they try twice, and back up into that range right now. And you'll notice we almost have another smaller range that's forming right now. The bottom line is it looks like we have a range-bound market. We got pretty much a pendulum swing. The amount will move above is the amount will move below. So we're looking pretty balanced right now. This euro looks pretty fat and happy here at this point. And so what I'm going to do is, we know we're bullish. That's for sure. We're overall bullish right now. And again, right, with the overall kind of climate out there in the U.S. right now, right, it would make sense this euro to be gravitating higher here, right, because the newspapers, of course, are filled with fear these days. So the euro should naturally gravitate higher. Most importantly, too, anytime we see a strong move like this, there's a big bullseye right now, right up to retest those highs. So that's where the buyers want to go. The buyers want to get back up, right, to retest that high. So how do we get there, right? How do we get there? There's really two ways to do it. I don't want to trade inside the range, that's for sure. So I got to wait for a pullback, right? I'd love to get a pullback right now. A pullback would be ideal, okay? Or if we do make a run higher, we can look for that kind of failure, right? That two-try breakout with that trap as we go higher here. So that's going to be my goal here for tomorrow. I want to stay out of the middle of this range. Sorry about that. I don't want anything to do with the middle of the range. That range looks a little bit too nasty here right now. What I'd like to do, though, is get that shot going lower, right? Get that shot going lower. And it wouldn't surprise me. This is a relatively strong move down, right? Relatively strong move down. They may try to make a run back to retest that low. And if they do, the pattern I'm going to look for tomorrow is the same pattern we saw coming off this low, which is that nested. So if they do get that move lower here, that's going to be obviously very bearish, right? The market will look very bearish at that time. And to be a buyer on this, I'm going to want that moving average coming over. I'm going to want to see sellers trying once, trying twice, and we'll buy into those stops, right? Let the bears try a couple times on that pullback. I really would like it most if we can get a retest of that low, right? I'd love it if it would tap that big round number at 12,000 and then give us these two tries so we can buy going into their failure, right? That's the idea behind it. The idea is just keep using this range, right? Get below it. Bears try once, they try twice, back up now into that range, right, as the magnet. Now, if we keep going higher, our target we know is up to retest that high. The most important thing, though, is I can't trust this thing just going higher right now. Okay, so there are a couple scenarios that we want to keep our eyes on. One, of course, is that strong breakout. And then because we have that major level of resistance overhead, it's a two-try trap low. 1, 2, trap, and go. Again, we have to get the got to get the bulls to take their profit first. Then the bears get in, and then once those bears try to sell, nice strong signal. Again, we need those stop losses to act as rocket fuel to propel this market higher because there won't be a whole lot of buyers up there as we try to retest that high. Now, another thing I'm watching too is this may end up as a spike in channel. So if we see this thing run higher here, I'm going to try, we'll obviously see if we can get it to work, right? But 1, 2, looking for that to kind of come off of, right, the low of that, right, the low of that channel. So that's definitely something I'm watching as we go. But there's one thing we need as we go higher. We need to see strength, right? We need there to be a sense of urgency as this market runs higher. We need buyers to start thinking, I better get in now before I miss this move. Okay, you'd be amazed at how much a little bit of sense of urgency can go a long way to help those types of trades, right, retest those highs. Because again, we know where they're trying to go, but as we get higher, right, as we get higher, we don't want to buy too close to that high. So those are the two basic scenarios. And again, the hard part will be just sit patiently here. We don't want to trade the middle, right? Get us down 1, 2, and back up, or up. And again, I'll keep an eye on that channel, look to buy that pullback to finish off that move going up to retest that high. Last but not least, how do we turn bearish? Same plan as always. 1, 2, 3 for the move lower. Mark that low, mark that high. And again, we're selling off of that high, right? Strength with that 1, 2, 3 reversal pattern for the move back down to retest the low. And I'll tell you, if they can get a strength move going back down, If this thing turns ugly here, right, for those bears, this is Monday morning's open right there. So that 11,500 area, if we get that 1, 2, 3, I think the writing's on the wall there. They're going to make a pretty good run down to the beginning of this week's trading session. So that'll be our magnet for us tomorrow if we get that run going lower. So all things look pretty range bound right now here on the euro. The euro, we're waiting for that pullback to retest that high. Gold, of course, right? Gold, of course, as I mentioned earlier, wait for proof as we go higher. The Nasdaq and the S&P are both waiting for a pullback, and I've got those 4 scenarios that we're waiting for here on the crude oil, right? And don't forget, as I mentioned earlier, if you haven't done so yet, make sure you join that free trading course. I'll put all the links right in the description of the YouTube video. You can also register right on our website here, right to the left of my ugly mug, that big red button that says free trial. The free trial comes with your free pass to our trade room, our free trading course. You'll learn all about our 3-step trading strategy. And just remember, when you register, I'm going to send you an email. Sometimes those emails get stuck in your spam filter, so check your spam filter, your junk mail, your promotions folder there if you don't see the email. And as always, come trade it with me tomorrow. Tomorrow morning, we open up every morning, 8 o'clock Eastern time, bright and early, with all of our clients in our trade room. I'll tell you, the strategy is really simple, guys. It is. It's a very simple 3-step trading strategy. What's not so simple is applying it to a moving market. And that's why our trade room is such a great advantage for all of our clients. We open up every morning, Monday through Friday at 8 o'clock Eastern time, and I want to see you there with me tomorrow morning as a brand new client. If you have any questions, don't forget you can call that toll-free phone number there. We've got live support here right below the video here tonight on the website. So keep in touch. Join the free trial, grab yourself a membership, right, and come see me tomorrow morning in the trade room. If not, call, email, Skype, and whatever you do, enjoy the rest of your evening. I always appreciate you guys being here every evening. And as always, we'll see you guys tomorrow morning at the opening bell. If not, same time, same place tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.